What is going on, traders? Welcome back to the Traveling Trader. Happy Wednesday to you. So today I wanted to talk about, obviously, we're going to go over the markets. We're going to go over Bitcoin. We're going to go over a few stocks and coins that we've been trading and give you some updates on those. But specifically, I wanted to talk about why Bitcoin tends to crash after hitting swing highs and whether that is something that we can expect in the near future as Bitcoin now has reversed the downtrend and is looking to go back to at least the 14K range that we saw in June of 2019. Now, whether that will happen before the halving or not, in my view, I don't think it will. Just based on the last two halvings, I do think that we'll get into the 0.618, 0.786 territory between 11K, 12.5K. But I mean, when we're dealing with something this high priced, you know, we're talking about incremental differences between, say, 12.5K and 14K. So it could very well. I just don't think it will. But anyway, that's not the point. The point is, why does Bitcoin tend to crash after hitting swing highs? And the simple answer is volume, right? So volume consistency is the answer. So when something tends to, even if you look at something like Tesla, right? Tesla hit $970 just a couple of weeks ago, or actually just last week, sorry. But it's obviously not the range that Tesla currently trades in. Tesla was at this resistance level of, $380 really for two and a half years almost. So this is considered the normal range for Tesla. And before that, Tesla wasn't at that range, right? Tesla was in the range of below $100 before it saw a rally and normalized. So Bitcoin needs to do a similar thing, and it will continue to do a similar thing. Obviously, there was a time when Bitcoin was worth a few dollars, and now it's normal for Bitcoin to be in the thousands. However, it's not normal for Bitcoin to be 14,000 or 20,000. And this is proven if you look at the VPVR. Now, this is called the Visual Profile Visible Range. And what this tells you is at what price range, at what price level do we see the most volume on Bitcoin? And obviously this changes the more or less you zoom into the chart, because obviously it's just representative of the data that you have on the screen. So if you just zoom into when Bitcoin was in December 2018, when it was at 3,200 before the rally to 14,000, you'll see where most of the volume lies. However, regardless of which way you cut it, regardless of how far back you go, regardless of how far you zoom out, you'll see that Bitcoin, the reason that it struggles when it hits these swing highs is because there isn't any consistency of volume at this range. You'll see that most of the volume on this chart, the Bitcoin Tether chart on Binance, goes all the way back to August 2017. You'll see where most of the volume lies, right? Most of the volume lies between 6,300 and 8,500, and not at 14. Look at how slim the volume is at 14,000. It's this shaded area that doesn't even register, and even less at 20,000. So that's why Bitcoin tends to crash after hitting after hitting swing highs. It needs to normalize. Now you could see how much time it spent in June 2018, how much time it spent in this range between 6,300 and 8,500. It spent a lot of time trading sideways, and that's the consistency that we need. So yes, it's great that we see gradual rallies in Bitcoin, but what we need to do eventually is trade sideways for a considerable amount of time at, say, the 14,000 range, for that to be the normal range for Bitcoin. Just as right now you look at Tesla, you'll see that, in at least in the short term, Tesla is trying to stabilize now in the $700 range. It did hit 970, but that's an anomaly currently, right? So it is trying to stabilize in this range. It could even, fall back down to say the 500 or 600s. We'll go over Tesla in a second. I'm not saying that's the analysis. I'm just giving you an example of range normalization, right? So even if you look at let's look at Bitstamp, and this one goes far back on the trading view chart, right? It goes all the way back to 2011. If you zoom out all the way, you could see obviously where Bitcoin spent most of its time, but Bitcoin has, as of recent, normalized in these ranges in the thousands. Again, no matter how far you zoom out or zoom in, the $14,000 level and the $20,000 level. I mean, these are just anomalies for Bitcoin. Now, in my view, in the future, in the long term, after the halving, once we start to gradually run up, we'll see Bitcoin trading sideways in maybe the $12,000, $14,000 range, and these will become the normalized ranges for Bitcoin, especially as supply starts to dwindle. So just something to think about, and obviously this relates to your profit taking as well, because a lot of people were caught holding the bag at when it hit 20,000. A lot of traders at that time weren't very experienced. Their first entry into trading was during the all-time highs in crypto, right? And so they're holding bags of Ethereum at 400 or bags of Bitcoin at 20,000, and then it starts to crash, and they don't really know what to do with it, or they don't really know what to expect from Bitcoin being at that all-time high. Well, if you look at this visible range here, it will give you a sense for where Bitcoin or any asset is normal trading at, right? Where its normalized trading range is at. So it will allow you to be better prepared and set stop limits, right? Obviously, I'm sure people wish that they took profit at 20,000, or people who, when it hit 14K, wish that they took profit there. Now, if you're in it for the very, very long term, then you are likely okay with going through these swings and these crashes, although that they are a lot more severe than they would be on, say, something like the stock market, right? Going from 20,000 back to 3,000 back to 14,000. I mean, those are just insane swings. In my view, if you're going to be trading this market, you should be looking to swing trade it, at least in the midterm, right? If it's hitting 14K or 20K, you'll want to set trailing stop limits and take profit at those levels, especially because we don't have the consistency of volume at those levels. There just aren't enough traders in Bitcoin to support it at these levels, right? People lose interest and gain interest in Bitcoin very quickly. Bitcoin traders are very fickle. I wouldn't even call them traders, just the masses that enter the crypto market. They tend to enter it when it trends on Google or when they see it on CNBC. So they're definitely very fickle, but there will come a time when the five figures becomes a normalized range for Bitcoin. So just something to think about as you're trading. Now, in terms of my stance on Bitcoin, it's still the same. We have this resistance level here in the recent term at around 10,200. We have this nice Adam and Eve pattern that you see here, golden cross between the 50 and the 100, rising VFI. The RSI is rising as well. There isn't any bearish divergence currently between the momentum indicators and the price. We'll need definitely to crack this level convincingly and close above it, at least a couple of candles, for us to start the next rally towards 11,000 and 12,500. And I'm definitely looking to long Bitcoin at the 21 EMA, as well as some of the other coins like Ethereum, Litecoin, etc. And if you want those entry and exit levels, if you want those trade alerts, link is in the description. We are up 19% on our link trade. This is the third or fourth time that we trade link, but on this recent swing we are up 19% on link after it crossed this resistance level here and treated it as support. Definitely have a trailing stop, especially as we near major overbought levels. We're up 56% on our Litecoin trade. Again, this isn't the initial Litecoin trade. This is just the latest swing of our Litecoin trade. But as it bounced off of the 100 moving average, we bought Litecoin and it's up to 56% now. I think there will be some resistance on Litecoin at around $85, just based on this historical level that you see here. So there should be some resistance here, especially as we get overextended. But I do think there is a clear shot for at least $100 Litecoin in the midterm. And again, I will be sending that out in the trade alerts. Already have sent those out in the trade alerts. Looking at the stock market, continues to do really well. Again, I think that the market is largely ignoring or downplaying the coronavirus, the possible ramifications in the global economy and the U.S. economy from the coronavirus. There is news that the coronavirus cases are slowing down, and the number of cases are falling, and that the virus outbreak itself is slowing down. Now, whether I wouldn't blame the Chinese government for putting out this news in order to stave off some of the negative effects that their economy is feeling right now. So whether that's true or not, at least that's the news that the market wants to accept, and you see the markets just surging again. We're up almost 0.75% on the Dow, up about 0.5% on the S&P, and about another 0.75% on the NASDAQ. Oil seems to have bottomed out, which is good because we have a position in UWT, which is the ETF that tracks crude oil, but it's back up over $50 a barrel. So our UWT position, which was actually down recently because of the coronavirus outbreak, is up around 8% today. And just based off of the technicals here, it looks like this is the bottom for oil, unless there is some news that comes out, some unexpected news that comes out about the outbreak itself. But because China is the largest consumer of oil, oil definitely took a big hit, as well as airline companies, travel, etc. Now Tesla is definitely flagging here. It's forming a pennant on the 1 day, which is very interesting. As I was saying before, Tesla is now it's going through its mode of price discovery, right? This is now looking like a continuation pattern based on Tesla reaching 970 highs and falling back down to this level. As I said, when I was talking about Bitcoin, Tesla is looking to normalize prices here. It continues to be the number one shorted stock, which is crazy. As I stated before, a retest of at least the 21 EMA is not out of the question, but because prices are so high, the 21 EMA right now is around $666. So it wouldn't be so bad because it's at 765. I would definitely buy Tesla rebuy Tesla at the retest of the 21 EMA. Our second position on Tesla that we entered at 333. Well, the funny thing is we entered at the retest of the 21 EMA here, which was around 332, 333 when we entered. So our position on Tesla is still up 130%. I mean, definitely the best gainer in our portfolio. And I send out my portfolio every week as well to the trading group. So sign up if you want access to that. I send out my stock portfolio and my crypto portfolio, in addition to the trade alerts, the crypto, stock, and options trade alerts. But yeah, we're up almost 130% still on our Tesla position. Because we're up so much, you can afford to keep your stop limit wide, right? Because Tesla did go up to 970. So our position was up 190%, but it's now up 130%. And I'll look to see how this pennant plays out. If we do start breaking to the downside, I will definitely exit my position and look to re-enter at around the 21 EMA. And I'll just end the video by giving you a freebie. So I'm definitely looking at the Chinese stocks, mainly NIO, which we have a good position in and have made about 50% in a short amount of time. NIO is the Tesla of China, basically. But you know, it's in its infant stages. This company's in its infant stages, so good opportunity to grab it here for the long term. But because of its low price and the momentum of Tesla, it's riding on the coattails of Tesla. It has also been a good swing trade. Luckin Coffee is another one. So basically, the Chinese stocks, you know, if there's any real solid news that the coronavirus is actually contained, or they find a vaccine for it, which could be, you know, quite a ways away, a few months away, or there are no new cases reported. I mean, with all these outbreaks, whether it's Ebola or SARS or MERS, you know, that's essentially the genesis and the evolution of the virus itself. Like there will be a point where it hits a peak and it will be contained, and then we'll start seeing diminishing cases of the virus. And once that happens, I think that, you know, Chinese stocks, especially those in the food industry, in travel, those related to oil, those that have a large production or manufacturing dependency like NIO, you'll start to see those rise tremendously, at least in the short term, barring obviously a, you know, recession or correction in the global markets. Anyway, that is it for this video. Sign up if you want access to the trade alerts. Again, you get the stocks, crypto, options trade alerts as well. And you also are a part of the group voice chats that we do, where we talk about trading, strategy, entries, exits, technical analysis, coins, stocks, etc. I really enjoy doing those. Those are really fun because I get to interact with the group and I learn a lot from it as well. Subscribe to the channel, hit that notification bell, leave a comment if you have a question, comment, agreement, disagreement, leave a thumbs up if you get anything out of this video. Stay safe out there, traders. Peace.